Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TILRAY BRANDS INC quarterly report. TILRAY Brands Inc. offers a diverse range of products and services across various segments. The company's business includes medical cannabis products, adult use cannabis products, reselling and distribution of pharmaceutical and wellness products, beverage production and marketing, hemp-based food products, entertainment products, distribution to retailers, wholesalers, patients, physicians, hospitals, pharmacies, researchers, and governments direct-to-consumer sales. The company operates under multiple brands, including Tilray, Afria, Broken Coast, and others. Its services cater to various industries, making it a comprehensive lifestyle consumer products company. Tilray Brands Inc.'s stock price surge. A year of optimism and expansion in the past year. Tilray Brands Inc.'s stock price has increased significantly, exceeding 32.08%, driven primarily by developments in cannabis policy and company-specific news. Two key events have contributed to this surge. Firstly, growing optimism over a potential shift in U.S. federal cannabis policy, specifically the possible reclassification of marijuana from a Schedule I to a Schedule III substance, caused Tilray's stock price to jump 32% in a single day in August 2025. This anticipation of lower tax burdens and easier research opportunities for cannabis companies was a major catalyst. Secondly, President Trump's endorsement of CBD and Tilray's expansion into the German market further boosted the company's shares, rallying approximately 40% in early October 2025. Additionally, an expanded medical cannabis partnership in Italy and broader optimism, fueled by speculation of U.S. scheduling reforms, contributed to the stock's appreciation. These instances reflect the market's positive reaction to potential regulatory easing in the U.S. cannabis sector and strategic business expansions by Tilray Brands, resulting in a significant increase in its stock price over the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, the acquisition of Craft II has offset declines in beverage revenue, while Canadian adult-use cannabis sales have grown by 12% year-over-year due to increased demand for flower and non-infused pre-rolls. International cannabis revenue has also seen a 10% increase on a constant currency basis. In addition, changes in product mix and foreign exchange impacts within the distribution segment have contributed to revenue growth. The company's strategic focus on value-add innovations in the wellness segment has also driven revenue expansion. However, there are also factors contributing to revenue decline. Canadian medical cannabis sales have decreased by 3% year-over-year due to patients switching to the adult-use recreational market. Wholesale cannabis revenue has declined by 24% year-over-year as a result of reduced excess inventory and price increases in the BWO billion market. The integration of Craft acquisition I and variability in funds provided under the ATM program have also contributed to the decline in revenue. Net income and profit margins experienced significant fluctuations between 2024 and 2025. Initially, net income increased in 2024 due to various factors. However, in 2025, it decreased by $3.7 million, with a smaller decrease of $0.6 million also reported. Profit margins also saw a decline across segments. The beverage segment's profit margin dropped from 41% to 38%, while the cannabis segment's margin fell from 40% to 36%. This decrease in profitability can be attributed to several factors, including the adoption of new accounting standards for crypto assets and increased restructuring costs. The positive trend in adjusted gross margins, non-GAAP, was not explicitly stated, but implied due to revenue growth in certain segments. Nevertheless, the overall decline in profit margins suggests a challenging business environment that impacted the company's bottom line. The company has successfully achieved its goal of generating positive operating cash flow. Despite a minor fluctuation in net change in cash used in operating activities, the overall trend indicates a positive operating cash flow. This is a significant milestone for the company, demonstrating its ability to manage its finances effectively and generate sufficient cash from its operations. The company's financial performance reveals mixed results across different segments. Notably, the Canadian medical cannabis and wholesale cannabis markets underperformed, indicating a need for improvement in these areas. On the other hand, the Canadian adult-use cannabis market and international cannabis markets showed strong growth, demonstrating potential for expansion and increased revenue. Management's outlook on company strategy. The company expects a positive outlook, driven by expanding market share in the U.S. through showcasing product quality and introducing new offerings. It will also focus on growing its market share in better-for-you categories, particularly in natural and organic food and beverages, through value-added innovation and strategic acquisitions. Internationally, the company is well-positioned to maintain and gain significant market share in medical cannabis markets due to its vertically integrated infrastructure and investments. Management aims to generate positive cash flow from operations and achieve free cash flow positivity by optimizing infrastructure, headcount, and discretionary operational costs. The company has made significant moves through acquisitions and divestitures. Key acquisitions include Kraft Acquisition I, which marked a notable expansion for the company. Additionally, Afria RX was awarded a license to cultivate medical cannabis in Germany, further solidifying its presence in the European market. On the other hand, the company has also engaged in divestitures, including the sale of marketable securities. This strategic move allows the company to optimize its financial portfolio and allocate resources more effectively. The company's financial summary reveals that they have a history of paying out dividends to their shareholders. This indicates a commitment to returning value to investors through regular distributions of profits. Concerns about inventory buildup and supply chain disruption. The cannabis industry is facing significant challenges related to inventory buildup and supply chain disruptions. The shift towards asset-light business models has led to excess inventory reduction, but this may not be a sustainable solution. Furthermore, delays in receiving import/export permits are hindering international shipments, exacerbating the issue. Additionally, potential supply chain disruptions due to tariffs on input materials such as aluminum, hops, barley, malt, and vape componentry pose another threat. These concerns highlight the need for effective inventory management and supply chain operations to mitigate these risks and ensure a stable cannabis industry. That concludes the financial summary for TILRAY BRANDS INC. Feel free to comment below, and I will be happy to answer them when possible.